Today, we will learn one of the most important price action concepts, breaker block strategy, for day trading and scalping. I'll cover bearish and bullish breaker blocks and how to identify hidden supply and demand zones, importance of support resistance flips and how it affects our trades. Finally, I'll show you how you can identify the best breaker blocks before trading. Again, I'll try to guide you with the step-by-step instructions. If you're ready, let's start. Okay friends, this is our fifth conceptual price action video. Market structure breaks, order blocks, imbalances, Quasimodo, and now breaker blocks. I also publish study documents on Google Drive for free if you are interested. Now let's see the breaker blocks. Okay, let's talk about the breaker blocks. It is a really simple concept which is extremely useful. What is it? So every failed order block actually is a breaker block. If you are confused, don't worry. Let's look at this chart. We keep making break-off structures creating order block zones to trade. However, if every order block worked, we would be the richest man alive altogether. This is why I stopped answering questions like, which order block will work? Okay, as you can see, our last order block creates our demand area after the break-off structure. The expected move was that the price comes down and reacts to our demand area. But this time it did not happen. It breaks down and creates a market structure break. Now, our failed demand order block becomes a supply breaker block. Price reaches to the new supply area and reacts. It is quite simple, guys. It just requires practice. Let's see an example. As you can see in this example, we were in a little uptrend. I specially choose this example. Even if everything is high quality, your trades will not work all the time. This is why we always use stop-loss orders, so we never lose our main capital. Okay, price breaks above strongly. It even leaves an imbalance. And the last red candlestick that starts the move is our order block. Now what do you expect? Price comes to our order block and reacts from there. However, it's not the case all the time. As you may see, it fails, changing the trend direction with the market break. Now what happens? The order block becomes a breaker block. So our failed demand zone becomes a supply zone. It's just like a flip. Price comes to our new supply zone and reacts strongly. You can also notice it also fills those tiny imbalances before the big fall. Let's see how it works with the bearish order blocks. It's exactly the same idea. Once an order block forms with the last break-off structure, many traders take it as an indication of a supply zone. What we expect here, obviously, price comes up and reacts to our supply area and probably creates another boss to the downside. This is the wishful idea. Sometimes order blocks will not hold and price breaks to the other direction. This failed supply order block instantly turns into a demand breaker block. As you may see, the price comes down to our new demand breaker block and reacts. Again guys, it's so simple. With regular practice, price action trading will be a piece of cake for you. Let's see an example. In this example, price strongly breaks down with imbalances. And the green candlestick that starts the movement is the order block supply area. Actually, this is a really good setup. However, you remember why I keep saying always combine high and low time frames together. If you do not do that, this will happen because you have no idea what is happening in low time frames. Maybe it keeps making break-off structures strongly without any weaknesses. Best results always come with the combination of high and low time frames. Okay, after this, it's quite easy. our supply order block becomes a demand breaker block. Price moves up and comes back down to our new demand area and reacts to it. As a side note, do not delete your order block drawings from your charts. You can later on use them as breaker blocks. New supply or demand areas, it is quite useful. The concept of a breaker block is actually quite similar to SR flips, which are support resistance flips. So basically demand becomes new supply or supply becomes new demand. Unlike SR flip lines, we actually consider a large zone and area. It makes it much easier for us go down to low time frames for finding great entries. Let's see an example. If you look at this chart without order blocks, without breaker blocks, without any price action setup, you can see how the SR flip zone happens and the price reacts. Support resistance or supply demand flips are amazing price action concepts for additional confirmations for our layer systems. As you can see, the price makes a break here and creates our demand area with the order block. But the weak order block does not hold the price and it breaks downwards very strongly. And as you can see how the price reacts to the new supply area. It is incredible. You can see pin bar rejections, which is also a good old evening star candlestick pattern. However, the best idea is to open low time frames and confirm a micro MSP for the best entry, best stop loss, and the best target. In the final chapter, let's talk about how to identify the best breaker blocks possible. There are a couple of significant points to identify the best breaker blocks. 1. Weak boss. One thing that you may look for is weak boss. So what we look for is stop hunts rather than strong breaks. 2. Opposite strong break. A strong reverse break with the failed demand supply area is a perfect indication for us. 3. Of course, our lovely imbalances. Seeing an imbalance with a strong break is always an additional confirmation for me. 4. Obviously, if you can identify an SR flip, it would be really great to see that, because in my experience, it works great. Okay friends, let's check these examples step by step. 1. Weak boss. As you can see, there's a really weak boss. This pattern is actually also called as swing failure pattern. It is for hunting stop losses for liquidity. And this nice red candlestick is our order block with the demand area. 2. Reverse strong break. Just look at this. One giant red candlestick. It just destroys the demand area at once. Now our demand order block becomes a supply breaker block. 3. Imbalances. I think I do not even tell you this anymore. One giant and amazing imbalance here. Very useful. 4. SR flip. This general area actually worked as a support zone. It was holding the price. Later on, with a strong break, it turned into a resistance zone. Finally, you can see how the price reacts from the breaker block. It is simple and amazing. You can also notice the pin bar rejection with the evening star pattern. All these price action patterns keep happening thousands of times a day for thousands of assets. With practice, you will catch them all. Okay folks, I hope you gained some knowledge about breaker blocks trading and how you can use it for day trading or scalping. If you have any questions in your mind, please leave a comment below. I'm happy to answer them. If you liked the video, please subscribe to the channel and leave a like for me. Thank you, take care, and see you soon.